worldwide run, if you will, physical silver. And that's why the inventories in these exchanges are being drawn down.
What are the latest developments in the silver market? Today, we're fortunate to be joined by Mr. Stuart Englert. He wrote the book on silver, specifically this book, Rigged, Exposing the Largest Financial Fraud in History. And he's agreed to talk to us about what he sees going on in the silver market right now, and maybe a glimpse at what we might potentially expect in the near future. Stuart, welcome back to Ron's Basement.
Hey, Ron, how's it going? Everything okay in the basement today?
Everything's good in the basement. I'm doing well. The gold bear's doing well. The silver bear doing well. And we're really fortunate to have you. I know you've done extensive research over the decades into the precious metals markets, specifically silver as well. So we're grateful that you're with us today. And I had a question I wanted that comes up from a lot of my viewers and regarding these vault inventory levels at the COMEX, at the LBMA. We're hearing that those levels are dropping and dropping. Is that a big deal, or do you have any thoughts on that subject?
Sure. I might first explain a little bit about the inventories at the COMEX, if you don't mind.
No, that'd be great.
Yes. By the way, the inventories are falling, but let me explain a little bit about the inventories, and then I'll go about the volume, if you will. First of all, there's basically two types of categories, Ron, of metal that's stored at the COMEX, in the COMEX warehouses. First is what's known as eligible metal, and that means that it's the metal is eligible to be deposited in one of these COMEX approved warehouses or vaults, okay? And it's eligible or qualifies to be deposited there because it meets certain standards and specifications. And that has to do with the weight of the bars and the fineness or purity of the metal, as well as these bars have to have identifying numbers on them, stamped numbers, so that they can be tracked in a system. And that generally is referring to the 100-ounce gold bars and the 1,000-ounce silver bars. Then the second category is registered metal, okay? And the registered metal is all eligible as well. It meets these standards, but it also, the registered metal can be withdrawn or delivered from these warehouses on these COMEX futures contracts, okay? That's how the metal is traded on the COMEX exchange. So that's basically the two types of metal, okay? And those contracts stipulate the price of the metal in that contract. Does that make sense?
That makes sense. So the registered is the actual metal that's backing up all of these futures contracts.
That's right.
And is it?
And it can be withdrawn. It can be withdrawn from.
Okay.
Right.
Now let me ask you a quick question on that. And that's where we hear about there's only so many ounces for every. There's 300 contracts for each 1 ounce and registered. Is that where that relationship comes from?
Yes. And that's how the metals can also be manipulated, because these contracts can be increased for large volumes of what I call imaginary metal. What do you call it?
Unicorn.
Yes.
Unicorn fart test.
Let me add one other thing. Not all eligible metal becomes registered metal. Some of the metal is just stored in these warehouses by the metal's owner, such as industrial user or an ETF, an exchange traded fund that trades in gold and silver.
Okay, so the registered metal could potentially be delivered. Let me ask you another question, Stuart. Of all those contracts, of all those futures contracts that are written, in theory, I know it never works out this way, but in theory, could every one of those futures contracts be demanded for delivery?
I guess it could. They could. The people who buy those contracts could ask for delivery on the metal. The problem is that there are so many requests or valid contracts that the metal isn't there to fulfill all of them. So most of these contracts are settled in dollars, okay, fiat currency, as opposed to actual physical metal. And there again, that gets back to how the price is manipulated on these markets.
So right now, and I don't know if you have this data at hand, because I've heard different numbers quoted, but for like each 1 ounce of silver that's in the registered category, are there 100 contracts written on it? 200? Do you have any idea?
You know, I haven't tracked that specifically, but yes, I've heard that 100, 200, 300 ounces can be traded for every physical ounce of metal in these warehouses. Yes.
Wow. Is that where, like let's say we get in a situation where there's another crisis or huge demand for silver that pops up? Is that where people talk about the COMEX breaking potentially at some point, or the LBMA break? Well, I guess the LBMA did break with nickel last year, where so many people say, I want my silver. I have a contract you wrote me that says I can get 1,000 ounces of silver. And if too many people show up, I'm oversimplifying things, but on delivery day, the silver is just not there.
Right. And that's technically called a default, when these contracts can't be fulfilled with the physical metal. And, you know, there's that potential there in the silver market. If enough people who own these contracts demand physical silver, there could be a default on the COMEX. Now, you mentioned the falling price, or the declining inventories, I should say, in silver. And yes, silver inventories on the COMEX are declining, and they have been declining for the last 2.5 years. They've fallen by, I just looked this up, 126 million ounces, or 32% over the last 2.5 years. And that's specifically since January 27th, 2001, when the so-called silver squeeze began. I guess you've heard about the silver squeeze, right?
Yes.
And some people that want to upend this market rigging and boost the price started accumulating large amounts of physical silver. And the registered silver alone has fallen by 82%, or 27 million ounces, since the squeeze began. And all of this is tracked by a fellow by the name of Michael Lynch, who goes by Ditch the Deep State. And he tracks this stuff, and he's on Twitter if people want to see the actual numbers. That's where I got these numbers from.
Okay. So subsequent to the silver squeeze, you're telling me that the amount of registered silver has dropped by over 80%, if I have that correct?
82% is the latest number that I saw. Yes.
So Stuart,
that was as of Friday.
It begs the question, right? We had the silver squeeze, where I guess we could say, quote unquote, there was a silver shortage. Even during the early phases of the health crisis that we had in March of 2020, there was a bit of a silver shortage. Just recently, the little banking crisis, where 2 of the 3 largest banks in the history of the United States went belly up, we seem to have, to one degree or another, a silver shortage, right? Just 8-9 weeks ago, it was very difficult to find silver, and we had bullion retail companies having record sales amounts. What do you foresee as we progress through these, you know, when the next crisis or the next event occurs? Do you think it's possible we could be getting to a point where the silver market really does, I don't know if the right word is explode, but for lack of a better word, explode?
Well, I've been waiting for that for 15 years. You know, the 15 years or so that I've been tracking this, I've been waiting for this to happen. It hasn't happened yet, even though the stars are aligning. Worldwide silver production is falling and has been falling for years. Okay, demand is increasing, both industrial demand and consumer demand. People that are trying to look for something beyond the fiat currencies as we have inflation and depreciating dollars and other currencies. So yes, all the stars are aligning. It should be happening, but that comes back to my book. The money masters, the people that control the money supply and manipulate these markets, don't want that to happen, because if you have a huge price or a spike in the price of silver, a lot of more people rush into that sector, and it would upend the whole system. As you say, it would implode the COMEX. There'd be defaults, and it would be a huge mess for the bullion banks and governments.
Yep. It's an interesting scenario. I even hear, I want to shift over to China for a second. I've been reading and seeing reports that in China, they're also experiencing kind of a drawdown in their vaults. Have you heard anything about that? That the Chinese are, there's a recent great video by James Anderson from SD Bullion, where he goes through a couple recent news reports out of China where they're just saying like, hey, we need more silver. We need more, that the demand on many different levels over there is going through the roof. Yes.
I don't track that market, the Shanghai Futures Exchange, as closely as I do the COMEX. But, I've been reading the stories and reports as well that there's a drawdown of silver inventories on that exchange as well. I actually looked up the numbers, and the exchange now has less than 1,500 tons of silver, okay, in its warehouses. And that's down from 1,800 tons last month, and a record that was set, an all-time record of 3,100 tons back in 2021, before the silver squeeze began. So yes, there's a worldwide run, if you will, physical silver, and that's why the inventories in these exchanges are being drawn down.
And at the same time, don't you find it interesting that silver mining activity is almost at I don't want to say an all-time low, but the amount of silver being produced every year is shrinking from the mines. And right. And people like to point to the fact that, well, 70% of silver is mined as a byproduct of the base metals. But I always go back to what I heard Ross Beatty say. He's the chairman of Equinox Gold. He's kind of a mining sector legend. He said, the fact of the matter is that a lot of this byproduct silver came from copper mines, and the new copper mines are having to go much deeper. And when they go much deeper, they don't have as much silver coexisting with the copper. I mean, it's mind-blowing to think that we're in this situation where so much more silver is being demanded, but because of, I guess, do you think that's because of the price manipulation, keeping the price artificially low? There's just no money going into the mining sector.
Well, yeah, you've kind of answered your own question there, Ron. Production is down because mining is down. I actually visited a silver mine up in northern Idaho a number of years ago and went 3,000 feet below the ground. And you're right, silver often is a byproduct of other types of mining. At the Galena mine, they also mine lead, for example. Lead, copper, and things like that are what these miners are going after, and silver is the byproduct. And you're right, there aren't that many exclusive silver mines. Most of them, as you say, are silver is mined as a byproduct of these other base metals, if you will. So if there's not enough money, capital flowing into the mining sector to bring these metals out of the ground, you can have a reduction in silver quantities, production, mining. And that's what we're seeing.
Yeah. And it's even further exacerbated by the fact that 25% of the silver that's produced every year comes from Mexico. And I follow the mining stocks and the silver miners very closely. I talked to some of the CEOs. Mexico is becoming super increasingly difficult as a jurisdiction to mine. And I think, as a matter of fact, don't quote me on this, but I think it's Newmont just announced they closed, and it's because of a strike and issues going on, but a massive silver mine in Mexico that was producing 30 million ounces of silver per year. Now it'll probably reopen, but 30 million ounces, that's, if my calculations are correct, that's 3 or 4% of the world's silver output. So we got all the silver coming out of Mexico, and it's, nobody wants to even think about building a new mine in Mexico right now because they're making it so difficult.
Right. Yeah. Environmental controls, opposition to mining, and Peru also is a primary producer and has been for a long time. South America, Central America are hotbeds, if you will, in the silver mining industry.
Wow. I mean, is it just me, Stuart, or does it feel like the stars are aligning for silver? But like you said, they've been aligning for 15 years, right?
Well, yeah, I've been tracking this since about 2006, I guess.
Yeah.
And what amazes me is that the powers that be have been able to keep a cap on the price,
Sure.
despite all these stars aligning, lower production, lower mining of the silver. And then you also have increasing industrial demand, solar panels, electronics, etc., and a growing number of people that are turning to physical silver as an investment or as an insurance policy or whatever you have, or just simply to try and upend the manipulation of the precious metals.
Yeah, I mean, as you were speaking, I was thinking, you said you followed this for 15 years. Imagine if you and I could, hop in a time machine and go back 15 years. I guess we wouldn't be talking over the internet or anything like that, but we met up for a cup of coffee, and I was able to show you what the world was going to look like 15 years from now, right? Our current situation. I think we both, I mean, we would probably think we would have, I don't know, triple digit silver or $500 silver. It is amazing that they've been able to keep a cap on silver and gold as well, for that matter.
Yeah, if you look at the amount of debt worldwide that's been accumulated by governments and corporations and individuals, and then you include on top of that the inflation, the depreciating currencies, you would think that silver would be multiples higher than it is right now. But they've been able to do this paper trading in the markets to suppress the price with what I call imaginary metal. And I don't know if we can break that cycle, the manipulation. To me, it comes down to people increasing the number of people that are buying physical silver, and making sure that they hold on to it. My big question is, do the silver stackers have the financial firepower and desire to buy more metal and then hold on to that metal to break this manipulation that's been going on for decades? That's the big, 100 million ounce question, I think, right there.
The 100, yeah. Well, in the other thing, I want to get your thoughts on this. It's not an easy statistic to nail down, but a lot of people say, let's say 1 in 100 people, and I think that would be generous, are silver stackers here in the United States, right? And we're the richest country in the world. And I think statistically, the United States is probably behind a lot of the rest of the world in terms of our appreciation for precious metals. The one thing that I get excited about is, and this even kind of relates to what we saw during this recent banking crisis and the other little, silver rushes we've had during the last 3 years, that if only 1 in 100 people own physical silver, um, and we get another 1 out of the 100 who wake up, right? That doubles the amount of money. I mean, I guess the exciting part for me is that it's such a low number of people that the runway ahead, is significant. If we go from 1% to 3%, that's 3 times as much money. And we've seen what just little bumps in the road have done to demand for silver just in the last few years.
Yeah, the number of people that are actually stacking silver is very, very small. And you're right. If you increase that just by a few percentage points, it's a huge amount. It takes a lot of silver off the market, if you will. Unfortunately, there are a lot of people that don't have the financial wherewithal to buy precious metals, and those that do, them don't know what's going on with the monetary system. But again, you don't need the majority of the people to wake up to what's going on to change the market. And I will say that it would only take a few whales, a few millionaires or billionaires to upend the manipulation and drive the price higher. And I think we're seeing some of that. There have been some reports out that some people with deep pockets, if you will, have entered the sector and are accumulating physical metals.
That's a great point. Thank you, Stuart. that made me feel even happier about my silver investment. We forgot about that, right? Everybody likes to talk about Elon Musk. And I read just earlier this morning, Elon Musk had a middle of the night trip to China where he was talking to them about the production of the automobiles, about building a massive battery warehouse and energy storage warehouse. And people are speculating, right? But if you look at the businesses that he's in, electric cars, solar panels, batteries, if we had a news headline that said Elon Musk buys a silver mine, something like that could also be a spark to send the price and the value, which is really what we're talking about, the value of silver much higher.
Right. And, I don't think these industrial users want to do a lot of promotion on this, though, because, they want to keep silver prices low, too. But if they're thinking long term, they would and should be accumulating physical silver while the price is low. And I suppose some of that is going on, but they're keeping it wraps, if you will, because they don't want to spark a rush and drive up the price before they've accumulated what they want to.
Wow. You hit another home run, Stuart, because I hadn't thought of that myself either, right? Why would Sony, why would Elon Musk, why would a major solar panel manufacturer want to go public and say, yeah, we need more silver, because that would just drive the price up, that would drive their expenses up. But at some point, I'm having a hard time putting this into words, the dam's going to break, right? They're going to get desperate enough, and the news will be out, and us silver stackers will have our day.
Well, like I said, I've been watching and waiting for 15 years. I suspect I've got a few more to wait. Right. In my book, I predict that the rigging will end, and if the rigging ends, the manipulation of the price is going to go up. There's no doubt about it. But we have to realize everything that's made with silver, whether it be electronics, solar panels, any type of technology that uses silver, the price of those things will also go up if the silver price goes up.
Yeah, I was going to add, don't take financial advice from Ron or Stuart, because we're typically 10 or 15 years too early.
or wrong. That's what I've been asking myself. How long can I be wrong? Right.
Yeah, I don't think you're wrong, and I don't think I'm wrong, because look, you just can't argue the fact that every fiat system every paper system, it's always ended in disaster. And, you know, I'm not a financial guru, but I do have a degree in accounting, so I understand debt and basic mathematics. When you look at the basic facts of the situation, it's, you know, how do I say this? I can't see silver like losing. I could, right, but losing a ton of its value. But the upside potential is even just from a wealth preservation perspective, I think is very attractive. Very attractive.
I don't dispute that. And I think, you know, if you study history, you learn that all fiat currencies eventually end up in the graveyard. And I think that's why the powers that be, the central banks are looking at these digital currencies. You know, they're trying to segue to something else while maintaining control over the monetary system. And I think a lot of people that are buying precious metals aren't really gung-ho about these, you know, digital currencies controlled by central powers. You know,
I can tell you, I can confirm your notion, Stuart. I can tell you my viewers of Ron's basement, and I can say this very confidently, most silver and gold stackers investors aren't real thrilled about the prospects of the CBDCs. Let me get your opinion on this. I don't want to go too long here, but you have such great information for us. I have a theory that if CBDCs are rolled out, that could actually be potentially very good for precious metals, because essentially they would be the last bastion of financial privacy. Am I missing something when I think that? I mean, I know there's always more to the story.
You know, I agree with you. And I've also thought of this. If central bank digital currencies are launched, the governments and central banks that launch them, I don't think are going to allow the private cryptocurrencies to remain. Okay. And if the private cryptocurrencies are shut down by the governments, can you imagine all the money that has flowed into these cryptos going into precious metals? You know, at some point that could happen. And I think we've seen some bouts of that. You know, when FTX went down, that gave a black eye to the crypto market. And I think some people started questioning whether they wanted to be in cryptos or whether they wanted to put a portion of their financial portfolio into physical precious metals.
Yeah, and you know, and just recently we've had major SEC, Securities and Exchange Commission, action against Binance and Coinbase, two of the biggest exchanges, like basically accusing them of financial crimes. As far as I can read into it, it feels like the government, I mean, it's just interesting times right now. So much going on geopolitically in the world, so much going on with the debt limit. We could talk for hours. We won't, but the debt limit suspension, CBDCs being rolled out in the US, and now out of the blue, this SEC decision to basically go after Coinbase and Binance. I mean, it's interesting times.
Yeah, the government and the regulators, you can tell they're trying to tighten the screws on these private cryptocurrencies now. And I think we'll continue to see that increase because they're not getting revenue. I don't know if you read your tax form this last year, but it asked you, have you invested or transacted in any cryptocurrencies, you know?
Yeah,
and,
I did.
You know, so they're wanting that revenue. And I don't think the crypto folks want to give them, you know, their royalty or their cut or their taxes, you know, off any gains that they've had.
That they've gone. Yep. I want to ask you one more question about the Fed, about monetary policy. But before we do that, I want to point out to everyone watching right now, again, Stuart wrote this book, Rigged: Exposing the Largest Financial Fraud in History. If you've enjoyed listening to him and you want to check the book out, I'll put a link to it. You can get it on Amazon. I'll put a link to it in the description below. I read the book. It's a concise, easy to read book. It's written for the mid-level to advanced level person in the precious metal sector. I think you wrote it so that it's easy to understand. Is that safe to say, Stuart?
Yeah, I wrote it as a primer to the subject, and I tried to use language that the average person could understand. And if I use some language that was kind of convoluted or complex, I tried to explain what it is. But I think, I think it's important for every person to know how our monetary system is manipulated and rigged, and then we can take some action to try and counteract that.
Interesting. Yep. Great book. I'd recommend to everybody to check it out. Any thoughts on we got a big announcement this week from the Fed, interest rate policy. Obviously, the last 16 months, we've had the fastest interest rate hike series in the history of, we don't have record high interest rates, but they've raised them at a pace that was the fastest in history. And it has a big impact on the precious metals markets. The pendulum swung toward, creating headwinds over the last 2 years, basically, for silver and gold. Any thoughts on where we stand now, and if maybe the pendulum could start swinging back the other way?
Well, the Fed is the head manipulator, if you will, in the world. They manipulate financial markets, bond markets, precious metal markets. But what I see when they're raising interest rates at the pace that they have been over the last year and a half, it tells me, Ron, that they are doing everything possible to defend the dollar. That's why they're raising rates. Okay, they're trying to get people to buy the debt, to buy the bonds that are issued, right? But that also raises a question mark in my head. Well, what's wrong with the dollar? Why do they have to defend it so ardently by crashing the economy? Okay, by forcing us into a recession. It tells me that the monetary system is sick and weak when they've got to come to the defense like that and raise rate the pace that they have.
Interesting. And as you were talking, I thought, at some point, if the debt continues to grow and if the interest rates are higher, which creates, more of a carrying cost for that debt, mathematically, at some point, there's just not enough money to buy all the debt, right? The only option is the Fed has to print more money to buy the debt from themselves, and
that's right. They have to create stimulus checks and put automatic deposits in people's accounts to keep the wheels on the cart and to try and keep the economy rolling. But every dollar that they issue now has less impact,
Yeah.
And that you can tell there's desperation at the Fed when they're having to continue to jack up rates,
Yeah. It feels like to me sometimes it's like a car going down the highway and somebody's trying to repair it as it's going down the highway. It's kind of a difficult situation.
And
Stuart,
then you can have accidents when you're trying to do that, by the way.
Right. Very good point. It's been really great talking to you, Stuart. What's that?
Thank you. I said you can have crashes when you're trying to do that.
Right. That's an awesome point. Did I miss anything that you want to mention, Stuart?
I don't think we've covered more ground than I anticipated. I appreciate the invitation back, Ron. I hope you're doing well, and keep up the good fight.
Well, thank you. And on behalf of all the viewers, you're a wealth of information. You've been very generous with us. And if we're lucky, we'll have you again here back in the basement. Thank you, Stuart.
Sounds good, Ron. You take good care, all right?